do not disturb on. And I should be live. Let's see. I'm going to move this to live chat. Make sure this is down. Yep. That is down. Hit the thumbs up button. And I'm going to do some, let's see. Do I want to look at, we did, that was Tuesday. And that was Friday. I didn't do Monday. So Tuesday scans. We're going to take some of these. Scans recap. That's Tuesday. Let's do, and then Wednesday I flew, so Thursday. So we really only have two of them that are up. This is Tuesday, and this is Thursday. I'm gonna bold these. God, I hate. And I guess no, I don't want title, body. We're just gonna bold it. And it's early. And my poor dog has a tick that I can't get off. So let's see. We're going to go over a recap of the weeks by QQQ, DJI, IWM. This is year to date. You can see the week. Morning, Joe. So these are the charts. Let me make sure I'm on Safari. Oh, do I have top in there? Yeah, top. We had someone join our Apple earnings live yesterday, and I think it was Julio. Poor guy. He is stuck on top. Inappropriate. But he's way down. Unfortunately, he's way down, and I wanted to talk about just hope and pray is not a strategy. I want to beat that into everybody. Hope and pray is not a strategy, especially with short squeezes. Take your profit when you can. And with Berkshire's weekend happening, I am going to. Morning, Jose. I got a note. I got a note in here. It's a short squeeze. I was looking. I'll show you. Let's switch over to Active Trader Pro. I was looking for you this morning, trying to make sure. Morning, Brian. Trying to make sure top. It doesn't look good. I know there was hope. The problem is in pre-market, you've only traded 321,000 shares so far. You can see the 10-day volume moved up from 5 to 6 with yesterday's volume amount. Yeah, it did. This one doesn't look good, unfortunately. Oh, perfect. That's great, because I think it has the chance of hitting 25 to 30 today, just based on some volume markers that I saw and some auto fibs. Here we can go into. We'll go back into Safari, and we'll go into TrendSpider, and I'm gonna do TOP. Let's see. Let's do the 6th. Let's do I think I'm going to do a 1-hour chart on this one. And we're going to zoom in, and then I'm going to do autofib. And you can see there's a Fibonacci right at 37 on the 1-hour chart. but it's so packed down here that when I looked at it, I was like, I don't know. Just didn't look good. But I'm glad you got out at 19 at least, because I don't know that it's getting back there. But I got that in here to talk about. Apple, they hiked their dividend too, by the way. Not huge, but they hiked it. Stronger than expected iPhone sales. Mac sales down. What's concerning about Apple is the decline in the quarter revenue. TOP, BRK. There are many folks that Berkshire's, yeah. Key CEO bought. Okay, yeah. Let's do a little bit of research into this. You can see crude oil, $70. That's gotta be crazy. Crazy low. Natural gas, $2.10. I talked about it with Zephin last night. And it is just, it's not good. Not good at all. But the one I wanted to look at is KeyBank. Key Corp. Yeah. So the head of institutional banking on May 3rd, 2 days ago, bought $733,000 at $9.78. If we go to Key and on the 4-hour algorithm, you'd be out. Where did he buy it at? He bought it at $9.78. So it's up 10% from pre-market. Still a falling knife. Doesn't have confirmation. If you look at it from a 65-minute algorithm standpoint, you're still out. You're still out. I mean, it's not very close to getting you in. I mean, that's a 9-day EMA. The 65-minute algorithm is built on an 8-day EMA. But futures are up. So, okay, I'm going to start recording here because I think I've got enough. I don't know. Can you guys hear the TV behind me? Is it distracting at all? I don't know if it is or not. Or if you just, let me know if it's distracting. Wow, and Apple is up over 170. Your boy here is very happy. It's a positive thing, man. Let me know if the TV is distracting, but I'm going to hit SPY. Take a look at SPY. There was an interesting discussion in a group. Sweet. Okay, thanks, Jose. There's an interesting discussion in my high net worth group app. It's called Long Angle. Good. I've got CNBC on behind me. I took a picture of my setup last night and posted it on the Facebook group. But there was a good discussion last night in the high net worth group about whether to buy put insurance on SPY if the debt ceiling doesn't go through. And there is a high end, and when I talk high end, I'm talking 9-figure hedge fund manager. If not 10 or 11. I mean, the guy, he's pretty well known, and he was saying in the group, he doesn't buy insurance. He doesn't believe in put insurance for events like the debt ceiling. He thinks it's a waste of money. He said, pick your direction, identify where it's going, make sure If losses entail, get out quick. But he said he's on the side of it actually will work out. So let's see about the weekly. There's SPY on the weekly. See, we talked about earlier in the week, we talked about the descending wedge, the green lines, and the ascending wedge of the red lines. I probably should change the colors. But this wedge has resistance up here at 420. I mean, it's clear 420 is the resistance level. The descending wedge has support at 365, 361. But it hasn't really hit there since October. I'd say 385 up here. 380 is probably more of a support level. And that would, if 380 is the support level and we don't break that, then we're in a bull market. I mean, we're in that bull market right there. But you've got to break this 419 in order to get, maybe I'll just do that on the podcast. I'll wait for the podcast to talk about that. Okay, might as well start. Good morning. It's Friday, May 5th. It is Cinco de Mayo. Cinco de Mayo. Your boy here is the whitest white person. I can't speak Spanish. I've tried. I managed call centers in Guatemala, managed call centers in India. The Guatemalan people tried to teach me Spanish. I just couldn't do it. It was Super Bowl day yesterday. We will get to Apple earnings. I will go over some of the earnings that we saw. Good morning, Larry. But I wanted to start out with SPY. And what you're seeing on the screen is SPY. This is the weekly. And we talked about, are we in a bull market, which would be the red lines, which is basically a ascending wedge, or are we just in a bear market bounce? Still not 100% sure, but this week kind of points me towards it. Again, we opened at 415. Currently, we're at 405, so we're down. It's a red candle. It's definitely a red candle. You're seeing a button hook. But I'm believing that since that 9-day hasn't really crossed over the 21-day, meaning that yellow line, I'm kind of leaning towards we could be in a bull market. And there was some discussion about in a group that I'm in, longangle.com, whether we should people buy SPY puts as an insurance on the debt ceiling. If you didn't know, the debt ceiling is being negotiated. If we default, it will be a huge blow to the stock markets. The stock markets probably will go down to this level of 360, which is the support level for a bear market. And this would have just been another bear market bounce. But you can clearly see the range that we're in here. The upper range here is about 420. I've said that before. The lower range in my mind is about 380. If we break that 380 level, then I think we go down significantly. But the overall assumption was do not buy protection. The debt ceiling will get done. There were some people who were nervous. Again, the Speaker of the House can be voted out with one vote. Just to bring it to the floor immediately, and he can be voted out, and then they'll need to vote on somebody new. He did get a deal done. In my personal opinion, it's a decent deal. It's not horrible. It's not great. I mean, it brings us back down spending levels, which is the key for it, but you don't know what it's going to wind up being. I mean, these guys go in the back room and they figure out stuff. So, but the big money, and when I talk about big money, that long angle group, it is high net worth people. So the big money is not necessarily buying a lot of protection. So that's essentially what it is. Now, if we want to look at year to date, this is SPY. QQQ, IWM, which if you didn't know is the Russell 1000, and the Dow Jones Spider. So essentially, where are we year to date? Year to date, SPY is up 6.3%. Fantastic return. QQQ, unbelievable at 20%, but you're still not where you were at January of last year. IWM down 1.73%. Dow Jones is hanging on by a thread. I think the official Dow Jones is negative for the year, but it is hanging on by a thread. That's year to date. If you switch to 1 year and you take a look at these, look, the Dow Jones is down 2%. IWM is down 11%. QQQ down 4%. SPY down 5%. So you're still not year over year in a positive sense. Go to 3 year, and it's even murkier. SPY is up 42%. QQQ up 46%. IWM up 35%. Dow Jones up 39%. You wonder why you want to be invested long term? This is the reason. It is all about timing. This is even lower because if we go to 5 year, SPY is up 52%. QQQ, you've almost doubled your money, 91% in 5 years. That is unbelievable. Typically in the stock market, the average would be 7 to 8 years to double your money. QQQ did it in 5. IWM 9.42. Dow Jones is up 36%. So IWM has been 5 years the significant lagger. And I'm just not a believer. 50% of the IWM doesn't make money, blah, blah, blah. You can read up on it. I'm not a believer in that. I'm a big believer in QQQ. I'm not a believer in Dow Jones and SPY. SPY is just your main kind of, hey, let's throw money in there and forget about it. So that's kind of a look. I more like to look at year to date just because in December, I had tax loss harvest typically, and then I wind up in January rebalancing my portfolio. I still haven't bought in. And the reason I haven't bought in is this chart on SPY. I just didn't know in January, if you look at January, this is January right here. This is where it starts. We're still up, and we're in that upward trajectory, but it went up so quickly. I didn't want to, take all my tax loss harvesting. I've still got money on the sidelines. I'm waiting to see what happens with the debt ceiling. The debt ceiling is the big one, and the June Fed meeting will be huge. We'll get some monthly employment numbers today, I think at 8:30, but that's essentially it. Now, let's talk about the Super Bowl from yesterday, Apple. Apple reported earnings. They hiked their dividend, and they increased their buyback. The buyback is now $90 billion. They're going to buy back $90 billion in sales. That's crazy. Let's look at Apple real quick on FinViz so we can see. They are a close to, it's $2.6 trillion company. Market cap is, $2.6 trillion is what they are. They're close to, I think it's 185 gets them to 3 trillion. But they're going to buy back $90 billion in stock. So that gets, again, their market cap. They're going to buy it back. They're going to own it. They typically retire it. It's a good, solid move. The average price target is 170. You're trading right at the price target. You're going to see some warnings, some price upgrades and blah, blah, blah. Again, their sales around 160. I haven't sold it. I haven't bought any protection on it. I haven't done anything as far as the algorithm goes. You were in back here at 153. Went live yesterday during the Apple earnings. A lot of people have average, a lot of listeners, and they messaged me as well that they have average. They thanked me for their average buy-in at about 130, between 130 and 140. I was pounding the pavement at 120. You got to get into this stock. Now, their ex-dividend date is May 12th. That's the next catalyst. It is not a huge dividend. I don't even think it's 1%. Yeah, it's 0.55%. It's because the stock just keeps going up. So it's a little bit of a catalyst, not a huge catalyst, but it's good. Stronger than expected iPhone sales led the way. That's because the iPhone 14 Pro was so in demand over Christmas. And that's essentially, it continued into January and continued down the first quarter. Mac sales down 31% year over year. The basis for that is because the past 2 years were so good because of the pandemic. Everybody was refreshing their computer, and companies had to buy computers for people working from home. The only thing that I saw that was concerning is Apple's total revenue decline for the second straight quarter. That's the first time it's done that. So a little chink in the armor, but as long as they buy back stock, I don't think you have to worry about it. In pre-market, it is up at 170, up 2%. I would say if you can get this in the 160s with a 160 handle, which you actually probably could today at any point in time, I don't see a huge drive up to 180, but 160s would be a pretty good target. Because with $90 billion in buyback and Buffett at Berkshire buying a ton back, that's going to be a catalyst probably for the next 3 to 4 months. The June, when they report next, I think it's going to be July or August. It's typically a weak quarter. So maybe they'll focus more on their move away from China into India. Maybe they'll launch something in India like a lower priced phone that is not as the problem with India is I think it's 5% iPhone penetration there. It's the lowest iPhone penetration in the world, and the reason is the Indian economy, they can't afford the iPhones, so they're making it there. Maybe they'll do some concessions and have a lower priced one. Speaking of Apple and Berkshire, Berkshire's weekend. It is the weekend of Berkshire's meeting, and CNBC is all over that. If you want to watch it, it's on CNBC. Sometimes it's kind of cool to watch it and see, but I typically just wait for the recap. It's nothing that I would ever travel to. It is kind of cool to see what they do. I'm a big Dairy Queen fan as well. I don't eat as bad as the 9-year-old known as Warren Buffett, but I do eat pretty crappy. I had fried chicken yesterday from Chicken Holiday. But here's the thing. Berkshire Hathaway is considered undervalued. And when you look at the core of the what they hold, and you can just Google what they hold, their holdings, there is no dividend on Berkshire. They typically buy their shares back. It's up 3% year to date. Its actual target price from analysts is $371. And you're trading at about $320 right now. If we look at the algorithm on Berkshire, the algorithm doesn't have you out. It's got that button hook that I always talk about at the top. It had you in at 302. Now the 4-hour algorithm on this one, it makes you 8% versus a 9% actual asset. So if you hold it over 2 years, you make 9%. If you use the algorithm, you make 8%. It is what it is. I mean, honestly, the algorithm, I wouldn't use the 4-hour on this one. I would just buy and hold. Berkshire is a self-managed kind of almost ETF where they just buy companies and you make a ton of money. Now, if we look at year to date and you look at Berkshire, here's what I want to say about Berkshire. Berkshire is Warren Buffett. And Warren Buffett is, I think, close to 90 years old. At some point in time, he may go. He has told family members if he goes, he said just invest in the S&P. Just find an S&P tracking fund and invest in that. So is it worth buying Berkshire? I think you should have Berkshire as a part of a good portfolio. I don't have it in the TrendSpider core portfolio. The reason I don't have it in there, I don't personally own it. I own S&P tracking funds versus just owning Berkshire, but I do think with their large Apple concentration, I do think it's undervalued. What do they have? 40% of their portfolios like Apple or something. It's similar to mine, and that's why I won't buy Berkshire. It's just because it's so similar to my portfolio. I think I've got a little bit more tech than I think they do. They're just a little bit more diversified. But year to date, Berkshire's up 3%, like I said. The S&P's up 6%. So the S&P is actually beating it. You go over 1 year, and the S&P is underperforming your Berkshire. Berkshire only lost 2%. S&P lost 5%. You go 3 years. Berkshire's up 79%. S&P is up 42%. You go 5 years. Berkshire's up 63%. S&P is up 52. This is why Warren Buffett says, hey, again, I think you should buy the S&P. For the long term, they seem to be underperforming Berkshire. Berkshire is, again, 5-year, 63%, S&P up 52. But that's with Warren's guidance. And the question is, does Warren's guidance give you an extra 10% over 5 years? Probably. And so he's just considering the changes in the S&P versus the changes in Berkshire. So he's told family members buy the S&P. I don't necessarily believe it. I believe that the Berkshire management will stay beholden to what Buffett wants. So I do think BRKB, if you think it's undervalued, and just Google Berkshire undervalued, you'll find a bunch of articles that you can read. But a lot of people do. And I wanted to take a look at those two because it is the Berkshire weekend. Let's talk about TOP. Let me take you over to TOP on Active Trader Pro. TOP is a short squeeze. Right now, it is trading at $16. It's got about almost 500,000 shares traded in pre-market. The 10-day volume is 6.4 million. The 90-day volume is 934,000. So it has been a crazy volume mover. It has traded between yesterday, 16 and 108, got up to 108, and then just crashed. It just crashed. I think 100 is 100% the where people just start selling. So do I think you can buy it at 16 and hope that it goes to 100? Absolutely not. I think on a Friday, I don't think the short squeeze is going to take place. I don't think over the weekend the short squeeze is going to take place. This one may be done. What I do want to tell people is if you got in and you bought in at 50, if you bought in at 60, hope and pray is not a strategy. This is a $3 stock. So when the short squeeze gets done and people close out their shorts, it is a $3 stock. If you're at 16, you could save yourself a lot of money by just selling out. Take your losses, write it off against some gains. This is 100% what I talk about when you take profits when you can. Taking losses, everybody takes losses. Even the greatest trader in the world has always taken losses. You just got to manage your capital position smartly. Do not make something like this a major portion of your portfolio. You will get wiped out very quickly. So that's about all I've got to say about that one. Again, if you want to see some of the short squeezes, some of the big movers, investing.com has a page here where you can go to markets. Hold on, where is it? I know it's on it is stock websites, and it is pre-market movers. Investing.com, and then there's it's just investing.com. Scroll down. Faraday is moving. The big one right now is NBTX, up 100% from $2 to $4. GOMD Pharma. Carvana is way up there. Carvana reported earnings a less than thought loss. It's up 45%. Carvana is crazy, going crazy. But if you want to do that, you can look at investing.com, and a lot of these, if you want to do a 5-minute chart and trade on confirmation above the 9-day, just do that. I think you're better off in that sense. But top, I wouldn't expect it to go crazy again today. It's just gone crazy a couple of days. Don't hope and pray. Buy it on confirmation if you want, but make sure you're taking profits at reasonable expectations. If you want to make 10%, and my typical day trading is, if I make 10%, and my 10% goal, I'll have a 5% stop loss on that one. And when it gets down to 5%, I'm selling. Coinbase reported. Let's take a look at Coin right here. They reported, and they are up 8%, less loss than expected. It is still expensive. It is crazy. I'm not sure I would buy that one, but wanted to bring it up since I did bring it up. DraftKings reported they are up 12%. Again, less of a loss. That's all that is. Nothing more. The banks. Let's talk about the banks. DPST lost a ton yesterday as well. In pre-market, it is up 13% to 456. Remember I said that I think this one will probably hit 550 at some point when we start getting some confirmation. But DPST and Urov, I had it on my notes. I'm not bringing it up because you mentioned it, but it was perfect timing there. DPST, remember, this is a triple levered ETF. So when you have triple levered ETFs and you're buying here at 6 and you think, oh my God, I know it's going to go to 10, hope and pray is not a strategy. Remember, if you lose 50%, it takes a 100% gain to get that back. Just remember that. So taking a 5% loss to try and make 10%, you can always buy lower. And then you can buy it back. Just make sure if these things start crashing and they don't have confirmation like they don't have today, it doesn't have confirmation. If we go to the 65-minute algorithm on DPST and we take a look at this. Now, this one loses you 40% versus losing 85% over 8 months. If you just bought and held, you lost 85% of your position. If you traded the algorithm, 65-minute algorithm, you lose 40%. It still has you out. It doesn't have you in. So I would absolutely, even though the RSI is down at 29, that MACD is super, super low, I still wouldn't buy into this one. Still don't think it's worth the risk, especially on a Friday. But if you wanted to trade it and you wanted to go a 5-minute, again, if you want to do a 5-minute chart candle on that one, I think you could. It's triple levered. It moves big, so you could do it. Let's look at PACW. This one is up in pre-market. It is up 22%. There's just seem to be beaten down. Again, it's an oversold stock. I don't know that I'd necessarily hold this one over the weekend. My thought on this one, if you trade the 65-minute, I don't think it's got you in on PACW as well. Yeah, doesn't have you in. You've got this gap here between $4 and $6. Could make a move up. I just think buying into a weekend, you're just asking for problems. Let's look at WAL, which is Western Alliance Bancorp. Same thing, doesn't have you in. There's this, it's trading at 18. It's got this gap up here at 26. Same thing, just, hey, worry about it. Go to FinViz, look at some of the articles on some of these banks. Zion is way up in pre-market. Zion Bancorp on the 65-minute doesn't have you in. Same thing, it's got a gap up here at 32. It's at 19. So these are just beaten down stocks that are up big this morning. You could get a volume, but I would trade these on a 5-minute, and I would absolutely not hold these over the weekend. One that kind of got a boost is KeyCorp. And KeyCorp, again, it's not a buy. It's at $8. It's at $9.77 pre-market. It closed at $8.93. It's up almost 10%, 9.5%. In the 4-hour algorithm, there's no way this is a buy. You can see it's just fallen off a cliff. But what I wanted to show you is KeyCorp. Their PE is 5, so they're decent. They have a 9.18% dividend. It is a bank that again traded up here around $20 until this kind of came up. Year to date, they're down 48%. Their target price is 16. March 27th, Citigroup upgraded them with a price target of 20. Again, it's just hey, we think in good times this is worth $20. You go down here, look at the insider. March 14th. Director bought $25,000 at $12.11. Head of consumer banking bought $100,000 worth at $11.83. Director Richard Hipple bought $23,000 at $10.66. And this is the big one. Andrew Payne, who is the head of institutional banking, bought $733,000 at $9.78. And today, You're trading at 980. So they're putting their money, unlike FRC, First Republic, these guys are buying in. These guys aren't, holding a 12-minute conference call and then not taking questions. These guys are buying in. So it was interesting to me that Key was the one where we saw a bunch of people buy in. Let's talk about KView. This is KView was a spinoff, and it was an IPO yesterday. This is nothing that you necessarily want to look at. I think it's hyped up. Any reaction is an overreaction, but it nearly doubled yesterday. And KVUE, it's a pharma from Johnson & Johnson. It's just a spinoff. Figured I'd bring it up because with that big of a debut, maybe the IPO market is coming back. Maybe we are. Again, if you go to SPY, maybe we are in that bull market. It is not just a bear market bounce if you go to the weekly, just to bring it back to the beginning. Look at that weekly. I mean, maybe we are in this bull market with IPOs coming back. Who knows? Let's look at, I think I've got everything there. Emmett brings up a good point. Crypto. Let's look at Mara. One of the discussions in the high net worth group is crypto. And are people running to crypto with the debt ceiling kind of happening, with, American public kind of waking up that, our currency is heavily manipulated? Maybe. Mara, 4-hour algorithm, buy at $10.35. I said down here at $6, it's $10 stock. Absolutely 100% $10 stock. This was March. This was where I started saying, hey, Bitcoin's got some momentum, and Mara and Riot could be bought. And you've gotten out with a 1% gain. This is the 4-hour algorithm, and you got out with a 5% gain. But you could have made a lot more money. Those button hooks are clear. You could have gotten out here at 8 and 9, bought in at 6, got out at 9, 30% gain. Bought back in at 7, gotten out at 8, good gain there. Bought back in at 7, get out at 12. This is a 10. I mean, honest to God, it's $10 stock. I think under $10 you buy it, over $10 you sell it. I wouldn't buy it going into the weekend. Who the hell knows what's going to happen over the weekend? Maybe Gary Gensler comes out of the SEC and says, hey, we're going to ban all crypto from the U.S. Don't think that's out of the realm of possibilities. So let's take a look at some of the Tuesday scans that we saw that came up. I'm going to do a recap. And I didn't do any scans for today because I don't want you buying into the weekend. It is kind of a rough time to buy. I am not buying. I think we're up a little bit high, so I'm kind of just sitting there. It is what it is. Pfizer got you out. So it got you in, but it got you out. I've said, hey, I think it's a good buy down here at 30 in the 30s because I do think it's a $40 stock. I think for the long term, you wouldn't be hurt by holding this one. But Pfizer, yeah, you didn't win on that one this week. XLY, remember, the indices are down. So a lot of these that got you in earlier in the week, they're going to be down and they're going to be probably getting you out. XLY got you out. Your boy here owns XLY. I just look at entry points. I don't necessarily get in and out of this one. This is one that I will use and hold for a long time. Cleveland Cliffs. I have been in Cleveland Cliffs. It got you in. It got you in at 15.10. Got you out yesterday's afternoon candle. So, yeah, it's been one that has pained me. I think my average purchase price is about $20. I haven't gotten back in, but it is one that I will get back in on because I do think this is a $30 stock. I just think that they're probably pulling back in the recession, blah, 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 the whole thing. mRNA, they had earnings. 133 was the buy-in. You're at 134. So over the week, maybe you made some money. Nothing huge. MRO, they had earnings. Got you in right before earnings. Got you right out right before earnings. You're still out. 23.53. The actual stock is at 22. Energy has just been hurt with all the talk of a recession. Energy is going to come back. Same thing with Viper. Viper here got you in right after their earnings at 28.30. It's trading at 26.83. So it got you right afterwards. Again, if you want access to the algorithm, get TrendSpider. COP, another one that got you in right before earnings at 100. You're at 97. Personally, I think anything under 100, I think you could buy this, ride it up to 100 again. Doesn't have confirmation. Once it gets its confirmation, I think you could buy it, but you kind of see how the 9-day is just turning there. Its ex-dividend date is May 15th. Let's see what they pay. They have a pretty good dividend. I don't think it's crazy like some of the other energy companies. It's 5.48, so it's a really good dividend. You want the dividend? Get in. You'll see it drop after the dividend. DraftKings, we talked about. This one got you in right before earnings with a secondary cross-up, and they are up 13%. $19 was the algorithm buy-in, and it still got you in. This is going to gap up at 24. Just to give you an idea of where the gap is going to be, it's at 24.08 right now. That's where your gap is going to be. Huge upward momentum all the way since April. DraftKings. AI. This is one that I said I don't think you should get into. 1843, it's at 1791. It crossed up. Simple as that. Simple as that. BABA got you in. Got you right out. Got you right back in. I mean, this is just putting in a floor here at 80. I'm out of my China stocks. I'm out of them. I'm not in them. Let's see. We can look at American Express. I said this is a good one for long term. It's tanked. Ironically, got you in at 159, got you out right there. And it's continued to tank. I think you could probably, again, it's gotten below that floor at 155. I think anything under 150 on this one is a good buy. You can look at AXP. Its PE is 15. If we go to Visa, the PE is 30. And AXP, with all the business travel that's coming back, the average target price is 184. It's got a 1.6% dividend. I do think that there's this trading range between 140 and 180 that you could trade with. I think this is much more a 165 kind of pivot point, if you will. But 150 is a good pivot point for this one. I think you're good on that. Melly, did they have earnings coming up? This is Mercado Libre, the Amazon. They did have earnings. It got you in right at earnings at 12.75. You're at 12.12. Thursday scans. We talked about SPXU. And Thursday, it got you in at 13.42. You're at 14.03. Not bad. Not horrible. Nothing to sneeze at, though. If we go down today, right now it's down 1.53. This is a triple levered S&P short. So when the S&P goes down, this stock goes up. SPXU. SDS, same thing, ultra short of the S&P. 39.86, it got you in. You're trading at 41.12. So not horrible, close to 5%, somewhere around there. HIBS, this is a high bear beta of the S&P. $6, it got you in. It was double cross up, but it got you in way back here, April 21st at 543. You're at 615, $6.05 in pre-market. Zoom, we talked about Zoom yesterday. I don't think you should get in, but got you in at 61.43. It's 62, nothing horrible. ETHE, this is one that, hey, $9.08. You're at $9.21. One that I want to bring up that we haven't talked about in a while is UVIXI. The VIX closed yesterday. It is at 1897 is where the VIX is. The VIX typically in high volatility markets like this goes to 30. If we're going to see more days like yesterday, if we're going to see more days like Wednesday and more of these huge moves, you're going to see this one move. $3.75. You're in UVIXI at 375 in the algorithm. It's at 414 right now. You had two green candles yesterday. Nothing crazy. I mean, not, you had a 3% move there. You had a 0.24%. Again, most of the morning candles are far bigger than the afternoon, just from a trading range. The May 3rd candle here at 1:30. Again, I'm on a 4-hour time frame here. So it goes from 9 to 1:30, 1:30 to 4. But this one is, 4.9% gain. I mean, if you could tell me that you'd get a 4% gain in the afternoon, I would be perfectly happy. But watch the VIX. I think it wants to go over 20. I absolutely think it wants to go over 20. So UVIXY would be the one to play there, specifically because right now, and I'm looking on Active Trader Pro, it's at 1890. It is down 5%. So I think it wants to go over 20. I don't know that it will go over 20, but UVIXY is one. UVIXY is a tool that a lot of traders have also said is broken. It just hasn't done well, and the VIX just hasn't done anything. So I think there's some ideas for you today. There's the recap. I'm going to post this up. It's now 8:35. Labor force participation rate 62.6%. The markets are flying. I don't know if that means that the labor jobs number came in bad or good. I mean, up is down, down is, up. It's just been a crazy market. April payrolls up 253,000. God, and the markets go up. So Jay Powell's going to freaking look at that and go, okay, we're going to hike another time. Just be careful. Again, the S&P, I think as it gets towards that 420, I am not doing anything. I may trade some, but I am not getting in long-term to anything. Some of the core portfolio that I think you could, I have to just hold on. The actual, there we go. The core portfolio, you get Apple up 2%. Bank of America's up 1%. That's a good one to always, especially at this price. Disney, 98, I say under 100. Devon's up almost 2%. It's under 50. Google at 105. I mean, you could wait for it to get under 100, but you could buy more at 105. Goldman Sachs, I think that one at 325. Its book value is about that amount. Coke, wait for it to get under 60. Meta, I think under 230 is a good buy. Moderna, we talked about. Microsoft, I think you wait until that gets under 200. NVIDIA is just NVIDIA is a little crazy. I've got it in the core portfolio here. 275 was the buy-in here. It's just gone up too much, and their earnings are May 24th, so you got plenty of time. Oxy is under 60. You don't know what Warren Buffett's going to say about that this weekend. Palo Alto Networks has just taken a dive. This is a $200 stock, and you're trading at 180. QCLN, this is one that's gone crazy. We can look at Sedge. This is one that I brought up yesterday. It was under 300. They announced earnings. It's at 281. This was at 260 prior to the earnings. It went all the way up yesterday, I think in after hours. Yeah, here it is. It went to 304. 304 yesterday in the morning candle. Again, if you would have bought here before earnings at 250, 256, 304 you could have sold it for. That's a great one. Roblox is one. It's up 1%. You get a cross up here at 34.48. You got this gap up here, 41. Their earnings are coming up May 9th. This may be one that I buy into today. 34.48. I like that one. Shopify yesterday, just crazy gap. I mean, wait for it to come back down. If you got it up here, maybe trim some of your position. I'm trimming some of my position on this one just because I think it's going to come down here below 50 again, and 57 is good enough for me to sell. But they showed profit. That's the big one. Tesla, 300% month over month gains in German deliveries. So they've got some good news on the quarter. You got this gap here between 170 and 176. That's the most recent gap you've covered, or come close to covering. It's 146. Again, I think if you can get this in the 1.5 range, the 15 handle, 150 something, I think that's a good one. UNH 487. Your boy here has been buying at 485 average price point. And then Exxon at 107. I think you wait till this gets under 100. And as oil continues to come down, this is just a great stock. It's going to continue to pay you dividends. And they're going to go up because they're either going to buy Pioneer PXD, which is one that I own, I think at 208, and it's come way back down. There was a report in the Wall Street Journals that Exxon was buying this, and it just popped, and then it's come back down to fill that gap. Popped here from 208 to 217, then it just came down, and it's just continued down. Doesn't have confirmation, so I wouldn't add to it, but I'll probably be adding a little bit to it. Okay. That is good for the weekend. Have a great weekend. Talk to you guys on Monday. Okay. I'm going to export this and then look at your comments. Export. Mullen. Let's look at Mullen. Let me look at Mullen. Emmett, Mullen has been on the most active list for a while. And Mullen, I would trade. I think just Mullen is, look, they did a stock split, 1 for 25 or 25 for, 25 for 1 to keep their listing. They did a stock split, and then all of a sudden, everybody started piling in. I don't think Mullen's got anything going for it. DPST won't go to zero. DPST is an ETF that is made up of regional banks. It won't go to zero. And I say that, full knowing that Jim Cramer says, similar shit about stocks that he doesn't know about. DPST, though, is just a... Here, let's see. Let's look at... We're going to go to... There we go. Let's see what it's made up of. Fund information. Strategy and benefits. Here's the top 10 holdings. New York Combank, Regions Financial, M&T, First Horizon. First Horizon just got killed when they called off their TD Bank cancellation. Citizens Financial, Truist, Huntington, East West, Zions is in there, Cullen. So it's not going to zero. It's got too many banks. That's only, by the way, look, that's 4%, 3%, 2%. It's got hundreds of banks in it, so it's not going to zero. But what they will do in order to keep their listing, DPST will do a reverse split to keep them. If they get down near the $1 range, they'll do a reverse split, and then you lose even more money. But if you're in at 6, I would have gotten out at about 550, to be honest with you, just for the hope and pray strategy. And remember, rule number 1 is never listen to a guy on the internet. That's rule number 1 of this podcast. But DPST, if you're in at 6, here's what you have to decide. Again, you're at 450 in pre-market, which is up 11%. You've got this gap here between 445 and 477. So I think today you may cover 477. This gap up here is a little bit tougher. If you're in at 6, let me see the auto fib. Yeah, see, your auto fib is up there. 621, 759. There's no support down here. That's the problem you have, is just there's nothing to gauge it on. There's no volume levels down here. There's nothing. So But you can see that big red line right there in the bottom? This is volume. And look at how the interest has come up. Now, this red line right there, it means people are just selling. I mean, they're just getting out. And people got out. The open was at 418. The low was 346. So the period was only 0.72, but that volume spike is enormous. Honestly, I would worry. I would worry about holding over the weekend. You have another bank go down, and DPST goes down. PacWest is the one. All of the banks are up. So it's assuming that the news that came out today about the banks is that there's no fundamental reason that they're going bust. It's fear. And so that's essentially what's driving it down. Why is this not charging now? There we go. AMD, let's look at AMD. AMD is down 2%. Let me see. Top is at 15. I own AMD at about 100, I think, my average purchase price. It's a good company to hold. I'm holding it long term. It is in taxable. So I'll hold it probably this year, and I may tax laws harvest it if it doesn't hit 100 by the end of the year, because it's long term. Quick garage, man. Save. I wish I could have given you better advice when you bought it at 6 to try and, hey, if you get, again, in my mind about capital protection when you're trading like that, if you get down, on a triple levered ETF and you're down 5, 6, 7%, get out. Don't hope and pray. And I say that full well knowing I've hoped and prayed. Markel. Let me look at Markel, Chris. Markel Corporation. It's focused on insurance, Markel. Look at that. Everyone's buying at 13. Its target price is 1,500. It's trading at 13. Nobody really covers it. It's part of the problem when you put a $1,500 price target on it. What is this? The independent director of Markel Corporation just bought 7.6% more shares. Yeah, I see that one. TQQQ is like any other triple levered asset. It is a decaying asset, and it will go down. Will it get back to at 19? It'll go back to 19. So here's the algorithm. Got you in at 27. You're trading at 26.57 right now. Pre-market 27.09. This is similar to DPST. Take your profits when you can. At some point in time, it'll be at 19. It's a great trade, though, Urev. Morning, Sherry. If you got in at 19, man. Urev, here's the question that I would have for you. First off, is it in a brokerage account or a retirement account? If it's in a brokerage account, what's your tax situation? When did you get in at 19? Is it long-term or is it short-term? Is it less than 1 year or over 1 year? If it's retirement, get out. You have a chance to buy it lower. Take your profits. I think that's a fantastic trade. If you're holding at 19, fantastic trade. If it's a brokerage account and it's tax, I would get out of your long-term. If you have long-term, if it's a brokerage account, yeah. I would, if you have, you probably, I never suggest holding TQQQ for over a year, but here, this is what's interesting. I'm going to show you something that goes against, yeah. Shit, I'd love for you to hold it until October. This goes against everything that I tell everybody. But let's do a comparison. And we'll do... Because QQQ is supposedly... look at this. 1 year... QQQ is down 4%. But TQQQ is down 36%. I know you guys can't see the right there, but you can see the left. Let me move my head a little bit. No. Move my head up here. There we go. So look at that chart. Just go to Seeking Alpha. Type in TQQQ and compare it to QQQ. And do the 1 year. Fubo, I love Fubo. 3 year, look at that. TQQ is up 61%. QQQ is 46%. So over 3 years, it doesn't triple. It doesn't triple. 5 years, TQQ is up 107. QQQ is 91. Look at how TQQQ just outperformed in 2020 and 2021, but it's significantly come back down. It's a decaying asset. It is meant for short term. So Urev, while I tell you I would love for you to hold it for at least a year, and I think some people have made it a year with TQQ. Like if you bought in 2020 and you just bought TQQQ, you bought down here at minus 14%. That's where it was. Then you buy it up here. Shit. You've done really, really well. Here, let's go back here. We'll look at TQQQ on a weekly. Okay. Huh. Mario Gabrielli is on CNBC right now. I like this guy a lot. Here's TQQQ. And its lows down at 10. Look at how poorly it has done. Now that we're in a pretty good bull market, it could go back up. But this is 100% a decaying asset. Let's look at Fubo. Fubo's up 22% on earnings. Wow. What did they announce different than all the other streaming folks did? Guidance. Raises full year. They raised their full year guidance. Let's see if people are buying. Options exercise. Nobody's sold. They've exercised their options. May 9th of last year. A couple of buys. I'm going to move you over to Active Trader Pro. And I'm going to, we're going to go to top. Top is at 15. Here's Fubo. Wow, Fubo just popped too. Look at the volume spike. Wow. Here, and I'm going to I'll upload the new episode, create episode, browse, the podcast, upload. I'm going to do swapping tubes again. I just like the name. That's the music you hear at the beginning if you listen on Spotify or anything. My ass would have been out of TQQQ at 22. By the way, hit the thumbs up button while you guys are here. And if you're not subscribed, subscribe. Need to hit more subscribers. I know I've got to get a tick off of you. You've got a tick embedded in your mouth. I love you. Okay. I'm going to cut this one short today. It's Friday. Dogs are up. I got to get going. Take care, you guys. Have a good weekend. I will upload everything probably in the next hour or so. I got to get a tick off my dog, and I hear my parents downstairs, and I need their help to get a tick off of her. It's embedded. Couldn't get it off this morning, so thanks so much, Urev. It'll go up. It grows by I think about 20, 30 subscribers a week, which for the amount of effort that I put into it is pretty damn good. But it's so focused on stocks, and people want to know. I mean, this is the problem with YouTube, and I go live and I'll look at other live channels. They want the big movers. They want the warrior trading. Guy turned a small thing. Yeah, I got tweezers. I have this thing called a tick tornado, and you can grab it. It grabs the tick, and you can pull. Hey, Jose, I'm watching top for you. I hope it doesn't go up to 100 again today, but I think you did the right thing. And don't worry, you'll build that account back up. You YOLO'd a little. You learned. You live and learn. But okay, dog is at my